Are you eligible for a VA mortgage loan? Picture this, a world where the dream of home ownership becomes a reality for those who have devoted their lives to serving our nation. Introducing the VA mortgage loan, a unique financial tool designed to support veterans, active duty service members, and their families in their journey to home ownership. The VA loan isn't just another mortgage option, it's a commitment from our country to those who have given so much, a beacon of gratitude shining into the often convoluted world of mortgage lending. The VA loan is aimed at making the path to securing a home simpler and more accessible, offering a range of benefits tailored to the needs of our nation's heroes. But how does it work? Who is eligible, and what does it entail? Don't worry, we've got you covered. So, let's dive in and understand the basics of a VA mortgage loan. Why consider a VA mortgage loan? This is a question many military service members, veterans, and eligible surviving spouses often ponder. The answer lies in the unique benefits it offers. One of the most attractive benefits is the zero down payment requirement. That's right, you can secure a home loan without the stress of saving a large sum for a down payment. Additionally, the VA loan doesn't require private mortgage insurance, a monthly expense that conventional loan borrowers must pay if they put down less than 20% of the property's value. Another significant advantage is the competitive interest rates that the VA loan offers. These rates are typically lower than traditional mortgage rates, which can result in substantial savings over the life of your loan. Finally, the VA loan tends to have less stringent qualification requirements, making homeownership more accessible for those who may otherwise struggle to qualify for a conventional loan. These benefits make the VA loan a compelling choice for those who qualify. Who qualifies for a VA mortgage loan? Well, the eligibility for a VA loan is primarily based on service in the armed forces. Veterans, active duty service members, and certain members of the National Guard and Reserves are all potentially eligible. The key lies in the length and character of service. For instance, if you've served during wartime, you need to have been on active duty for at least 90 days. In peacetime, however, that requirement bumps up to 181 days. And for the National Guard or Reserves, you need 6 years of service. But don't fret, if you were called to active duty, you might qualify sooner. And what if you're the surviving spouse of a service member who died while in service or from a service-related disability? You too could be eligible. Remember, eligibility doesn't guarantee loan approval, but it's a crucial first step. Meeting these eligibility requirements is the first step in obtaining a VA mortgage loan. What are the financial aspects you need to consider for a VA mortgage loan? Let's dive right in and begin with the down payment, or rather the lack thereof. That's right, one of the key advantages of a VA mortgage loan is that it does not require a down payment. This can be a significant relief for many prospective homeowners who do not have the large sums of money typically required for conventional loans. Moving on, we come to the credit score. Just like any other loan, your credit score plays a significant role in securing a VA mortgage loan. While the Department of Veterans Affairs itself doesn't set a minimum credit score, many lenders look for a score of at least 600. Now don't fret if your score isn't quite there. There are many ways to improve your credit score, such as paying your bills on time and reducing your overall debt. Speaking of debt, let's talk about the debt-to-income ratio. This is the percentage of your monthly income that goes towards paying off your debts. While there's no set maximum ratio for a VA loan, many lenders prefer it to be no more than 41%. This ensures that you have enough income left over each month to cover your living expenses. Finally, we must discuss closing costs. These are fees and expenses you pay at the closing of your mortgage. They include things like appraisal fees, title insurance, and recording fees. While the VA limits what borrowers can pay in closing costs, it's essential to remember that they can still add up. And there it is, a quick breakdown of the financial aspects of a VA mortgage loan. From the zero down payment, to the importance of a good credit score, and from the debt-to-income ratio, to closing costs. Understanding these financial aspects is crucial in determining if a VA mortgage loan is the right choice for you. What are some other important aspects of a VA mortgage loan? Let's delve into the VA funding fee. This is a one-time payment that the Department of Veterans Affairs charges on every VA home loan. But why is this fee charged, you may wonder? Well, the VA funding fee serves as an insurance of sorts. It helps to offset the costs of loans that default, ensuring the VA loan program remains self-sustaining and available for future generations of military homebuyers. Now, who pays this fee? Most military and veteran borrowers will pay this fee. However, there are exceptions. if you are a veteran receiving VA compensation for a service-connected disability, or if you are a surviving spouse of a veteran who died in service or from a service-connected disability, you are exempt from this fee. Next, let's talk about VA loan assumption. This is a feature that can be a potential benefit for both buyers and sellers. If you're selling your home, a VA loan assumption allows another person to step into your shoes and take over your mortgage, meaning they assume the loan as it stands with the same interest rate, repayment period, and other terms. This can be a real selling point if current interest rates are higher than what you have on your VA loan. On the flip side, if you're a buyer, a VA loan assumption can offer you the opportunity to take on an existing mortgage with potentially more favorable terms than a new loan. But remember, the VA and the current loan servicer have to approve any loan assumption. So, whether you're a home buyer or seller, these features of the VA loan can provide flexibility and potential savings. They're just another reason why the VA mortgage loan is a powerful tool for homeownership. So these are some of the key aspects of a VA mortgage loan. Is a VA mortgage loan the right choice for you? Let's recap. The VA loan boasts numerous benefits, including no down payment and competitive interest rates. It's available to eligible service members, veterans, and select military spouses. Financially, it's critical to consider your credit score, debt-to-income ratio, and potential closing costs. Don't forget about the VA funding fee, but remember, waivers are possible. With this information, you can make an informed decision about whether a VA mortgage loan is the right choice for you.